Hello, Annette? Good morning, good morning. Good morning. Can you hear me?
Good morning. Yes, we hear you.
Beautiful. Good morning, good morning. We're going to have a big turnout today, which is great. Lots to share. And we'll probably start at the bottom of the hour, maybe a little after, depending on how many people are still trying to connect. We have
Awesome.
over 80 signups, which is phenomenal. But a lot going on in the insurance world down in Florida, as you guys know, and we want to be as up to speed and up to date as we can be. Hi, Joy. Nice to see you. Looks like it's warm in beautiful South Florida today. I'm in Colorado, so it's still, we're trying to get the spring sprung here.
No, it's always warm down in Miami. We did get a cold front these last couple of days, but it got down to like the 65 at night. And then during the day, it's like 78, 80. So
Yeah. Well, yeah. I love Miami. Miami's got a great vibe, the whole area.
And you said you're in Colorado?
I'm in Denver, yeah.
Oh, nice.
That's where I'm based, yeah. Company's based in Chicago. I moved out here to be with two of my kids, so
Okay.
followed them out of Chicago.
Of course.
Yeah.
We always have to be close to our babies.
Totally, yeah. They never go
Yeah.
off the payroll, so that's
That's a big part of it.
I was just telling a friend, had I known the net present value of the economics, I think I would have made some other. No, I'm just joking, but
Some adjustments.
yeah.
I know. I have 3 of my own, so.
Yeah, they're awesome. They've all kind of found their paths, and that's the gratitude that I have.
Yep.
That they just kind of
Awesome.
they do their thing, and I'm just there, just kind of being the curb, just kind of
Always guiding, right? Some way.
Yeah. I've gotten out of the. I used to be not a helicopter dad. I was a snowplow dad, like
Okay.
clearing the way.
Yeah.
And now they're like, hey, I got it. But
are you sure? Are you sure about this?
yeah, I was on with their mother, and one of them I was on with last night, and she's going to take classes in Europe this summer, and
Oh, nice.
yeah, I mean, it's very fortunate we're able to help her do that, and it's a lot of decisions, and it's cool. Yeah, it's good for her, good for them. So it's good learning.
Absolutely.
Yeah. So leaving the
Absolutely.
nest and off they go, and yeah, but you're right. It's kind of like, don't want to have any irreversible challenges. Everything else,
Exactly.
fall down, pick yourself up, you keep on going.
Yeah.
And those are actually good, right? You want resiliency. You want them to feel like they can figure it out on their own, but you don't want to be in a situation where they can't come back from something that would be unfortunate. So
I agree.
So how old are yours, Joy?
Mine's are 3, 6, and 15.
Oh my God, enjoy those young ones for sure. It goes quick. Mine are 20, 22, 24, 26.
Oh, wow.
So yeah, it's
in your 20s.
Yeah. So it's a little nuts.
It's a
Little kids, little problems, big kids,
Yes.
big expenses.
That's true. That's
Yeah.
very true.
Joy, can you see what's on my screen now?
Yep.
Okay, great. All right.
Alrighty, so I'm gonna mute myself, and it was
Yeah,
nice
thank
meeting
you.
you.
Nice meeting you too. Thank you for joining this
Good luck
morning.
with all your little ones, or your
Thank
big
you.
ones.
Thank you.
Best of luck.
Thanks. Okay. For those just joining, we're expecting a big turnout today. So we will probably start right at about the bottom of the hour, maybe a little after. Got a lot to cover, especially given changes to FEMA in the last couple of years, and then obviously the citizens news that came out with the legislation in December. So a lot to cover, and then just flood insurance 101 is a primer here, so that everyone's up to speed on all the options and how we can help support you and what you do every day for your clients. All right, let's see here. Okay. Hey, Erica, can you hear me?
Hey, yep. Can you hear me? Hang
Yeah,
on.
yeah, you're much better looking Jason Harris though than I am.
My hair looks a lot better in that picture.
Well, and you have hair, so that's another positive too. Although I've got it here because I'm doing the Colorado thing. Yeah, can you maybe go in and change your name to your real name so that
Oh,
everyone understands
yes.
who you are?
Let's see. Let me fix
Yeah, that is your glamour shot, by the way. I will give you
Very
that.
much so.
For everyone watching at home, Erica is with our partner We Insure, and will be co-presenting with me today on the handling all the insurance questions. And for those of you just joining, we're expecting a big turnout today. So we'll probably start at 9:35 just to make sure everyone's on, and we'll be jam-packed for 60 minutes, and we're also taping it. So we'll make that available to everybody as part of the follow-up. So feel free to take notes and what have you, and we'll use the chat for questions. But then Edna, who's jumping on momentarily on our team, who runs customer success, she'll be bundling a package to everybody so that you guys have everything at your fingertips. And a shout out to the Miami training team, Miami MLS, Teresa, Lizette, Deborah, Liz, Sturrock, Connie, everybody on the training team. Really appreciate all the support over the last couple of years. Robert, others.
Why?
And if you could put yourself on mute too, that would be great. We're gonna have a lot of people on the call today.
Well, no, if they click.
Okay. Can everyone see my screen? Just give me a visible thumbs up if you can see the screen. Should be a slide. Just double. It's in slideshow mode now. Can everybody see that? Great, thank you, Nilda. Welcome, Dean. Okay. Okay. Can everybody hear me also? I see that a couple people can't hear, so just if you can just let me know if you can hear me.
I can hear.
Okay, great. Okay.
Yes, I can hear you
Okay,
well.
great. Okay, super. We're going to give it another minute or two. We're expecting, we had over 80 signups, which is great. I know there's a lot of interest right now, what's going on with insurance overall, specifically what's going on with citizens. We're going to cover a lot of that today. We're going to take your questions. We're going to have a lot to cover, as well as, kind of basic flood insurance 101. Hello, Fran Cardo. Good to see you.
Good morning, Jason. Good morning, everyone.
Okay. And Edna, can you hear me as well? Edna Hernandez?
Yes, I can hear you.
Okay, great. All right, we're going to start in about a minute or so. So we've got 30 participants so far. We'll probably get another 15 or so. Okay, everybody, we're going to start. Welcome to everything you always wanted to know about flood insurance, but we're afraid to ask. We're doing this training today, and then next week, same time. It will be in Spanish. It'll be led by Edna Hernandez. The content will be repeated next week as to what we have today. If you can mute yourself, that would be super great. We've got upwards of 30 or 40 people going to join us today. I'm Jason Harris. I'm the CEO of CartoFront. We've been a supplier to the Miami MLS as well as other MLSs around the US system. We've been in Miami since February of 2021, and we're grateful to be a part of your MLS and a value added service, free service to you as you conduct your real estate. Erica Ostrander is joining us. She's the director in the National Sales Center at We Insure. We Insure is a Florida-based insurance agency, and they're based up in Jacksonville, Florida. We're also joined by Edna Hernandez, Customer Success Manager of CartoFront. Edna will be managing our chat line, as will Fran Lightbound, who's our communications manager. We hope to answer all your questions in the next hour. We know there's a lot to cover. Edna will also bundle everything and send it out to everybody via email later today. Okay. So you are, let me go back a step here. Sorry about that. You are our customer. You are the realtor, and we focus on your needs and your clients' needs. Our service, as I mentioned before, which we'll do a demo of, is free. It allows you to get flood insurance quotes in every listing, as well as the ability for you to put your own address in and get a listing, get a quote. And then Erica's team is right there to help follow up and answer any questions. And we can help you all along the process, right? A sales process, whether you're on the buy side or the sell side. In the upfront part, as you're assessing properties or you're selling a property, we can help you identify the risk, help you identify pricing directionally for flood insurance. As you get to your offer, get to contract, we can really narrow down for you, get you specific quotes, get something in place for you, go to bind. And then between contract and closing, we can make sure you have everything you need so that it goes smooth at the closing and you have all the coverage that you need, not just in flood insurance, but general homeowners insurance as well. Erica's firm can do it all. Today, we want you to come out of this being the most knowledgeable, confident, profitable realtor in your market. We're going to give you a lot of information that will be both helpful to you, but also resources that you can pass on to your clients. A lot's gone on with FEMA over the last couple of years. We're going to touch on that. A lot's going on with citizens in just the last few months. That's going to be the heart of what we're talking about today and what you can expect. And then this is totally interactive. So please use the chat function to ask questions, form a dialogue with everybody in the group. As we start here, a couple of questions that we'd like to get some thoughts from you on. First, and please use the chat function. Have you tried our CartoFront application? So just say yes or no. Please type that in now. When you're looking to help your clients regarding flood or flooding information or risk, what type of information do you need? What do you need to advise on? So please share that with us as well. When you do share information up to your clients or share a quote regarding flood, what kinds of questions do they have or objections that they hear or you hear regarding flood insurance risk costs? And then last but not least, kind of an open-ended question, how can our service further help you in being the best that you can be? We have 4 different chapters we're going to go through today. A bulk of it really is in the first 2 chapters, an overview of flood today and doing a demo. Eric and I will tag team on Insurance 101, and then quickly we'll go through resources available to you and then get to your questions. Again, use the chat function to ask questions as we go today. So flooding has become not just a coastal thing, it's all over the country. Obviously, those of you living and working in Miami's Tri-County area, this is not a new subject, right? It's a day in and day out part of your life and your business.
Hey there, how are you?
Can you please mute your lines? Thank you so much. We have over 36 people now on the line. What we've done here is taken data from other parts of the country to show where there's unintended risk or hidden risk. And those areas in green you can see are where the FEMA maps, which are, a baseline, have now given way to projections as to where there's going to be more and more flooding over time, over the next 5, 10, 20 years. And you can see where it's dark and green are areas that have been hit most recently in the last year. California's gotten a lot of news in the last couple of months. It's raining back out there now. Mudslides, floods everywhere. Yellowstone was flooded out last year. Even places like Dallas, Texas, which are relatively dry in the summer, got about 8 inches of rain in about a day and completely flooded that city out. When we look at South Florida, the Tri-County area, there's about 565,000 residential properties that are at risk of flooding. These can be condos, these can be single-family homes, this can be commercial, this can be multifamily, but that's 1 in 3 properties in your area, and that's a significant number and the highest risk maybe in the country, maybe even in the world. Let's talk a little bit about FEMA. In October of 2021, FEMA modernized their program, calling it Risk Rating 2.0, talking a lot about equality in the pricing of their methodology. And essentially what they did is they put in a new layer of quotes. Instead of just doing things by flood zones and having a chart, now they're pricing each property by the individual property's characteristics. Things like elevation, distance to water, the replacement costs. FEMA told everybody when they went to this change, this modernization, that 1 in every 4 rates would go down, right? Because of the equality of how they're looking at this. But 3 in, please mute your phones. Hang on 1 second here. Edna, is there a way to mute everybody but me? Okay, thank you.
I think only you can do that as a host.
Okay, gotcha. Thank you. So 1 in every 4, they said, would go down, 3 in every 4 would go up, and we've basically seen that over time, over the last year and a half. Couple of key notes here. One is the maximum rate for any quote coming from FEMA is going to be a little over $12,000 a year. Those would be for the highest risk, and those would be for properties with the highest value right on the coast. The other 2 key things that they remained in their program, one is if you're on a flood zone, which would be designated as AE, AH, VE, you still need flood insurance if you're going to finance it. Okay, so that's critical to know that. The other important thing that they kept in the program is if a current seller has a FEMA insurance policy for flood, it can be transferred to the buyer at purchase. Really important. That may be a huge savings to your buyer if that's the case. On all renewals, the same approach is now in place with some modifications. So instead of repricing the property by those charts and those graphs, they're repricing upon renewal dates for people who have FEMA policies by the individual property itself, again, based on elevation, distance to water, replacement cost. But what they've done is they've capped the increase at 18% per year, meaning, let's just say it's $1,000 for a flood policy through FEMA. They've recalculated it at $1,500. The first year, you're only going to see a bump of 18%. So it'd be $1,180 for the first year upon renewal, and then they'd bump it 18% per year so they get to the market rate of $1,500. They've done it to make it easy on the homeowner so that they're not hitting them with a $500 increase in that example in 1 year. A couple of other things. If your community is part of the community rating system, which allows the entire community to be rated by FEMA, those discounts still apply, somewhere between 5% and 45% for everybody in the community. And then here's another key one. It used to be that elevation certificates were the thing. It was really important to show those. They're now less of value because that data is in the pricing calculation. Yet, if you can still show that the elevation certificate changes substantially the rate of the insurance, by all means, use that for your benefit, for your client, to drive down the cost of flood insurance. Just a couple of quick things. I mentioned it really quickly. So X zones are typically what we see are low and medium risk. In your area, 1 in every probably 2 are X zones. That said, again, FEMA's not rating things by zones anymore. So we're seeing a lot of X zones reading out like they're flood zones now based on the pricing. We'll talk about that in a moment. Flood zones are designated by A, AE, or AH, which are interior with high flood opportunities, or V, which is by the coast, starting with V for Victor. Just really important that you understand those definitions. We'll talk a little bit more about that as we go through here. Now, since FEMA has put in their new change, Risk Rating 2.0, we've taken about 35,000 quotes on our platform, not just in Miami, but Fort Myers, the Northeast, other places around the country. And we're seeing 3 basic trends as far as how the rates are coming back. One is the flood zone. So it's a known flood zone. This is a straightforward thing. You know that if your client's going to get financing for that property, you have to get flood insurance. It's really a matter of if you pick the government's product or a private insurance product like NatGen, which is on our platform. It's just a matter of how you price it and what's the best coverage for your clients, right? So flood zone's pretty straightforward. You got to get insurance. Straightforward on what the price is, what the coverage is. The second is what we call peace of mind. So it's an X zone, it's low to medium risk. And because of the pricing, it comes back that way. And again, in the South Florida area, Miami area, a lot of risk to hurricanes. Peace of mind contracts, if you can get it for something less than $1,000, it's what, $40 a month, $45 a month. That's just peace of mind for your clients in the event that a hurricane comes or massive flooding or whatever, and they get hit. It's just great protection, and you know, it's a reasonable cost to have that kind of protection. And it's just good, smart way to approach it. Ones that keep us up at night are ones that are technically, and I'm going to air quote this. Can you please put yourself on mute? Thank you. Are the ones that are on X zones, right? They read as historically low to medium risk. But when you do the pricing comparison, either the government or the private side sees risk in the property. And so the pricing has a huge disparity. In this example, the public option, the government is saying it's $1,500. The private side saying it's $500 for the same coverage. There's $1,000 difference. We're seeing 1 in every 5 quotes or 1 in every 4 quotes look just like this, which is there's a disparity as to who sees risk and who doesn't. In these, we would recommend that you do a double take with your client, really dig in deeply and understand what the risk is of these properties. It's happening time and time again based on this change by FEMA and based on how they're now more accurately quoting what the risk is on these properties. Now, I'm going to turn it over to Erica. We're going to move now into citizens and talk a little bit about what's going on with citizens in Senate Bill 2A. So Erica, you've got the next slides, please.
Thank you, Jason. So I assume a lot of you have been seeing this on the news. Senate Bill 2A was passed December of 2022. And the biggest caveat from it to start is that all existing personal residential policies renewing on or after July 1st that include wind coverage and are located in a flood zone, special flood zone risk area, are required to have flood insurance. Now, I want everyone to read that again. There are caveats to this bill, and as you can see, it's only policies that include wind coverage, and they have to be in a special flood area. Next slide. And under this new rule, an existing policy holder with citizens located in a special flood hazard area and whose policy includes wind coverage, they are required to secure flood insurance from either the NFIP or they will allow private flood insurance. And again, this is for existing policy holders starting July 1st of this year. Next slide. So some of the coverage requirements are going to be for dwellings equal to or greater than the separate coverage A and coverage C limits. On condo or unit owners, it must be equal to or greater than your citizens coverage A and coverage C limits. So it basically, it's going to have to match those rates. Those coverages that you have. So, you know, if you have a condo that's insured for $50,000 on the dwelling, and $25,000 on the contents, the flood's going to have to match that or greater. Similar tenant contents. So your renters in these buildings are going to have it match their contents coverage or greater. And then if in a co-op, similarly equal or greater than the coverage C. Next. If the above limits are not available from the NFIP, the citizens will accept the maximum amount. So if you do have a client that has, a home for $500,000, as you know, the max that you can get from the NFIP is going to be that $250,000 coverage A, $100,000 contents coverage. Citizens will accept the maximum. And also through the emergency program, the max being the $35,000 and $10,000. So they will accept the maximum NFIP limits. Next slide. So this is key. It's going to be a staggered rollout on this, and it's already starting coming up very soon all new citizens policies that are in flood zones have to carry flood insurance if they carry wind coverage. July 1st is when you're really going to start seeing turmoil, in my opinion, in the marketplace. Is all current policies with citizens that are in flood zones are going to start requiring flood insurance. And I was on a call with citizens recently, and they've prepped agents that they're going to give us kind of a dashboard of, who isn't compliant, who is, and there are going to be non-renewals and things going out. So I do anticipate this July 1st date becoming, a big shakeup in the marketplace. January 1st of next year, all current citizens' homes, regardless of flood zones, with coverage over 600,000 are going to require flood insurance. So, this is going to be a really big shakeup in Miami and South Florida. You guys have, every quote I do pretty much done in your areas is higher value than 600,000. So, it's January 2024. Citizens is going to really be affecting a lot of people across the state. And then January 1st, 2025, all current citizens with home insurance over 500. So they're going to be staggering it over the years to creep down in value. So by 2027, every citizen's policy is going to require flood insurance. And I'm sure a lot of Citizens has become the #1 property writer in the state. So this is kind of the answer to that in trying to get some policies out of there. But also, as you know, there's not as much competition in the marketplace. So it's definitely a turbulent time for buyers and insurance agents and realtors. So next slide.
So we're going to switch gears here, and I would recommend, we'll do a quick demo here in a second. I would suggest if you have questions to what Erica just talked about, please put it in the chat.
It's a lot.
It is a lot. And even us who are in the world are a bit overwhelmed by it, right? Given all that's happening here. So there's 2 access points for you to take quotes for free on our platform through the MLS. One is on the dashboard where we have our free little icon. The other is in each and every listing where you can click on our raindrop and ask for a quote, and they both, provide it right away. So let me go to, let me go first to, here, let me go back a step. Let me come into Gateway. Here, you can see it right here on the dashboard on the residential side. When you click on this, what happens is we serve up the ability for you to put an address in. So this is really best for those of you who are taking a listing and you want to understand what the risk is for the property. You're about to take a listing and you want to understand, or property that you own yourself, right? You become the insured, right? And you're like, oh, I want to get a quote, or I've got a renewal on my insurance for flood, or I want to just see if I can get flood at a reasonable price. You just put an address in here and away you go. When it's in Matrix, like here, here's a property for sale, single family. There is an icon here on the nav bar. You just click on that and you ask for a quote. And what happens behind the scenes is we take the data out of the listing, we send it off to get quotes. And in the meantime, what we're asking for is your information so that Erica and her team can follow up as needed. So we'll fill this out here. We can either do it by putting information in this way, or we can do it through Google. Do it through Google just so you can see how that works. Very easy. And when you hit sign up, then we ask a quick question on when the policy would start for your clients. And in this regard, we'll just say just browsing. And then once that's done, you're accessing the quotes. So a couple things
Just
about.
a note, I got Jim here. I was asking about that
Can
listing.
you please mute yourself?
Um,
Thank you.
He said the neighborhood's good, but the house is a dump.
Can you please mute yourself? Thank you.
He said it's beyond a dump.
Okay.
So it's,
Hang on.
he's got an offer. I'm gonna tell you, he's got an offer on it for $399. He said, which we're probably gonna take. He said, it's definitely the cheapest house in the neighborhood. He said, but he'll.
Okay, sorry about that, everybody. Okay, so let me go back to this here. Right here, you see what the flood zone is. So in this one, it's a flood zone X. And here's an example that we talked about, right? There's a huge discrepancy between FEMA and the private side. Okay, this is based on the same coverage, 250 for the building, 100 for the contents. This is the standard for FEMA. We've matched it on the private side through Beyond Floods. It was part of the Allstate system, and it's twice as much. So this is one, again, I'd mentioned it up front. This is where we would recommend a double take, okay? Couple other features about our platform. We're completely bilingual. So by flipping the switch here, everything's in Spanish now. Okay. We've got this great ebook that we'll be sending links to you on. This is basically an electronic version of the training today. We have this in both English and Spanish. Great job by Fran and Edna putting this together. Handy reference for you and your clients. This is really important too. This is kind of who we are as CartoFront, our platform. We know that we're dealing with sensitive information as it relates to insurance. Insurance is highly regulated. Your client information or your information is highly secure. We talk about all of that here. We talk about the importance of getting professional advice to take these directional quotes and talk with either Erica and her team at We Insure, or to talk with someone that you know locally. Either way, these directional quotes need to be bound by a licensed insurance agent. We have our terms of service, our privacy policy. We know how important it is to be secure in data. And so we have this right here, always in front of you. Once you've read it and understood it, you can click on that and that bug goes away. So that's our demo of our product. Again, it's free to you as a realtor, and easily used to forward onto your client at all times. Okay, let's get into Flood Insurance 101. Erica and I will kind of blow through this, and then we'll get to your questions here. Okay, so for insurance, there needs to be terminology to define what's considered a flood. Here's the official definition. A flood is defined as an excess of water on land that is normally dry, affecting, this is a critical thing, 2 or more acres of land or 2 or more properties. So if you leave your sprinkler on in your backyard and it floods, it's not a flood, right? It's got to be something that affects you and your neighbors. And the floods can be caused by a bunch of different things, right? It can be storms, hurricanes, snow, which we've seen in the South over the last couple of years, like Houston a couple of years ago. And other things like water backup from inadequate draining systems, dams, and levees. Again, if we can please mute ourselves, that would be super helpful. Okay, sorry about that, everybody. All right, back to this again. Okay. So in the last couple of years, by the way, because we've built so much on property in such a dense way, our systems aren't able to handle now the more torrential rains. When you get 6 or 8 inches in an April day or a May day, even before a hurricane in South Florida, that water's got to go somewhere. So the backup of the drainage systems, the dams, et cetera, can cause flooding, and that's really critical to understand. A flood is also not considered to be covered if it's a result of an internal pipe break or hole in the roof or broken windows. So if the property is in disrepair or something breaks and water happens on the interior, that is not a flood. Okay. All right. What is flood insurance? So flood insurance protects your property in the event of a flood or flood-related disaster. Here's the critical thing, though. It's not part of homeowners. It's its own policy. It's its own separate policy. It's handled separately. And that's an important thing for everybody to really understand and know. So we just showed this in the demo. There, the government is kind of the backbone of the system. Most people know NFIP, but there's also a growing list of private insurers that are now being recognized by all of the mortgage companies, by everybody, including FEMA, and have competitive rates. Beyond Floods is on our platform. It's owned by Allstate. It's rated A- by AM Best, which is a rating agency. It's a great product. There are other products in the market that you might know: Neptune, Aon, Rethought. There's a variety of different products of them in the market. Really good to get a comparison to FEMA. So when you take quotes on our platform, if it's a single family home, townhome, or condo or mobile home, you can get a quote. If it's on the commercial side, Erica can help you, but you won't be able to get a quick quote very, very quickly on our system. We're not able to generate something that quickly on the commercial side, but feel free to reach out to Erica and she'll be able to get that to you on a one-off basis. So there's changes and differences between the two programs, between the government and the private market. They're both now kind of quoting the same way. They're pricing things basically the same. The big difference is when you take a policy with National Flood Insurance Program or FEMA, you're actually taking a policy with the government. They're the direct supplier. They're working through people like Allstate or State Farm or other what they call write your own insurance companies. When you go to the private market, like Beyond Floods, which is owned by Allstate or Neptune, you're actually taking the insurance directly through that insurance company, right? So that's an important differentiator, especially as it relates to claims and who you follow up with. Now, the limits are completely different. So the government, coast to coast, it's always 250, 100. With Beyond Floods in the private market, they can go much higher on their limits. So Beyond Floods, for example, goes up to 1.5 million for the property itself. And then the way they do the personal contents is about 50% of that coverage. People like Chubb, like in your market where there's millions of dollars of homes. I saw one today on the market for 48 million. Chubb or someone on the private side, high net worth or self-insurance is the way to go. Again, Erica can place any of that for you. You just got to give a call. Again, the government's kind of one size fits all. So they have some very basic things regarding deductibles and very limited options as it relates to other coverage beyond just the property and the contents. On the private side, they have a variety of different deductibles so you can buy down your cost of the insurance. And then they also do some options regarding loss of use coverage, other buildings, et cetera. From a timing point of view, the government has still held to the 30-day waiting period. So for example, if we're in September and there's a hurricane brewing in the Atlantic, you still need to do it 30 days in advance. On the private side, though, they have a much shorter window because they're aggressive and they want to place the coverage. So it's more like 5 days. It varies from private insurer to private insurer. Now, both of these are waived if you're going to a closing. So if you're going to a closing, say on Friday, and you need insurance today, you can get the coverage today and it will be bound on Friday when that close happens. A lot of times people ask us, okay, when should we take a quote? I mean, the general rule of thumb is take the free quote, right? It's free, it's easy, it gives you some information. Typically, the highest risk properties are going to be priced best by the government. Even though they've moved to their new risk rating program, they're still somewhat subsidizing by their rates to make it affordable for those people in the highest risk areas. When it's low to medium risk, the private markets can be a great option. They kind of pick and choose a little bit based on their capacity, based on how much coverage they have in those areas. But generally, whether it's Beyond Floods or other private markets, you can probably get a very competitive price on that. Erica, if you can just kind of go through what the coverage is on buildings in the next couple of slides, I'd appreciate it, please.
Sure. So what does your flood insurance cover? Building coverage. So that's, you are used to seeing that on your homeowner's policy as coverage A. That's going to be the physical structure and the foundation. But that also includes any permanently installed carpeting, flooring, your refrigerators, built-in appliances. Detached garages are actually a separate building property policy. And then debris removals included as well. Next slide. Contents, so that's you'll see that on your homeowner's policy as well, as coverage C, your contents coverage. I like to describe this as if you were to pick up your house and shake it, what would fall out? That's going to be your contents coverage. So all your personal belongings, portable air conditioners, portable microwaves, artwork, things like that. Next. But importantly, what does it not cover? Your flood insurance? Any damage by moisture, mildew, or mold that's not caused by a flood. So just because you have like a leaky pipe in your house that hasn't been tended to and mold has started to grow, that's not a flood. So that's not going to be covered by your flood insurance. It does not cover any currency or precious metals, anything that would be outside of your structure. So trees, plants, septic systems, your decks, patios, fences, things like that are not going to be covered on the flood policy. No business interruption or loss of use coverage is covered on a flood insurance policy. And also none of your landscaping. Next slide. In the event that you do have a flood insurance claim, how do they typically calculate that? So replacement cost value, so that's going to be the cost to repair or replace the insured property. If it's your primary residence, both the building and the contents will be covered for replacement costs. So for example, if you had a TV in your home that was, let's say, 6 years old, they're going to pay to replace it with a brand new TV. Versus actual cash value is going to be the replacement cost value minus depreciation for wear and tear. If it's not your primary residence, so if it's a rental of yours, secondary home, then your contents are only going to be covered for actual cash value. So that same 6-year-old TV in my example, they're going to depreciate it by about 6 years of wear and tear when they pay out for it. Next slide.
Okay. So really quickly here, just a few flood resources as we move towards kind of the end in your questions. And Edna, again, will bundle all this and get it to you. We have a landing page on the Miami MLS website. So all the information's right there handy for you, English and Spanish. We'll have the links for you for the ebook, both in English and Spanish, so you can share that easily with your clients. In there will be links to things like FEMA, Citizens, We Insure, which is Erica's company, as well as Beyond Floods. And then if you have any questions on tech support, info@cartofront.com. Happy to answer those in a rapid fashion. If you have any insurance questions, direct them to Erica at We Insure. We'll have all this information as part of the follow-up. We also have a QR code that's handy reference for you. You can get quotes on your mobile device by just using this. And happy to work with you on the mobile side as well. Want to thank you for your time today. We know that you're busy and we appreciate you taking an hour with us. And now we'll get to some open Q&A. And with that, I will stop the sharing of this and get into straight video. We'll also move to having unmute by Edna, and we'll get into, or I guess I need to unmute it, and we'll get into your questions. So Ed, if you can start that, that would be great.
Thank you, Jason. Looks like we had a couple of questions. The first one, I think we wanted to confirm risk of flooding. So it was asking if lake views or lake access are always in high risk of flooding.
I'm sorry, ask the question again, Ed.
It says lake's view or lake access are always high risk of flooding. Marley, if you'd like to expand a little bit more on your question, feel free to unmute yourself.
I was reading this question and I think she's asking if you have a lake view or any type of water access, is it always a high risk of flooding? And it can really vary, you know, if you're on like a more of a man-made retention lake, something like that, it's not necessarily going to put you into one of those higher risk zones. But you know, any zone that's by the beach is going to be a higher risk zone. And some lakes, yes, do have higher risk zones across Florida. So it really depends. But you know, I tell everyone, you know, we live in Florida, even if you're not in one of the higher risk zones, everyone in Florida should carry flood insurance. We're all close enough to water for there to be a risk.
One other note on the flood zone determinations, right? It comes with every quote. And so you'll know based on what FEMA says, because we're getting the data directly from them, whether they view it as an X zone, which is in theory low to medium, or if they view it as a flood zone A or V. So that is part of every quote that we do. So that will be a quick indicator as to how FEMA views it. Okay, Ed, next, please.
All right, I think the next question is a little bit to expand on your double take. And it's asking to clarify the case when private and FEMA quotes are all over the place.
Yeah, I'll start, and then maybe Erica, you can jump into this because you're doing quotes all day long. With this risk rating 2.0 and the change, again, the old system was if you were on a flood zone, you got priced it a certain way, and if you were not on a flood zone, it was standard that it was like $600, regardless of whether you were in Miami or Montana. Now they're pricing the government is pricing each property by its own characteristics. And so how they view it in their computation versus the private market, and it doesn't have to just be beyond floods, it could be Neptune, it could be any of them. If there's a discrepancy, you know, we would strongly urge you to dig into it. I mean, that's the thing. And the example we just gave was twice as much from one side to the other. So Erica, maybe talk a little bit about what you're seeing day to day as you're quoting flood.
I was just gonna say what we're seeing day to day when we're quoting is things being all over the place, like what you're saying. And I used to be able to ballpark numbers for people a lot easier than I can now. It's really, I never know from address to address what is going to be considered high risk on this new risk rating 2.0. And it's pulling latitude and longitude. And so it's really, it used to be more so based on elevation and things like that. And I'm even seeing if I do have someone give me an elevation certificate, it used to significantly lower the premium at times, and now it's not doing that. But the good thing is that we now have access to a lot of private insurance carriers. So, you know, like Beyond Floods and in Jason's example is one of those examples. And a lot of these private markets have better coverage and a lot of the times lower premiums than the NFIP rate. But in some cases, the NFIP rate is still lower. But it's not a chart like Jason said anymore, where if you're in an X zone, it's $500. It's like you could be in an X zone, but it's $1,200. It's kind of all over the place, and it's really difficult for us and clients, obviously. But that's why that CartoFront raindrop's really a cool feature for you guys to be able to quickly kind of get guidance on that.
Erica, is there a silver lining in this, in the fact that there might be a discrepancy in price, but there will be potentially a low cost option, even though there's risk involved?
Yeah, so, well,
Or a lower cost option, maybe, even though the market's all over the place, right? You can still get some
Yeah.
coverage at a reasonable cost if that's the case.
yeah, I mean, there are cases I've seen where I just can't really find anything that's reasonable for certain addresses. But usually I'm able to kind of look around and find a lower cost option. And for a long time, the banks weren't accepting the private flood, and
Right.
now they are, which is really helpful to everyone involved.
Okay, let's go to the next question, please, Ed.
Okay, I hope it's okay to jump on the next two questions so that we don't move away for this one and it makes a little bit more sense. We're asked, what do we mean by dig in more in case of discrepancies?
Yeah, I think from a dig in, I mean, I think it's contacting Erica or someone who's in the business that can help you really evaluate what the risk is and get quotes that make sense, right? So, especially, as we talked, a lot of the property values in South Florida are way beyond the FEMA limits, right? At 250 and 100. So if a property is worth 500,000, you either have to, get private insurance for all 500, or you take FEMA for the first 250, and then you get private excess, what's called excess insurance, to make up the difference for the other 250. The whole concept of digging in is, again, high risk in this market, and you want to be protected. Your clients want to be protected, and if there's a discrepancy in any of the rates, you really got to find out why and really work it. It's not as simple as just handing it off. And maybe Erica, you can talk a little bit about maybe examples of how you've helped people get insurance where it's been somewhat complex and you've been able to help them.
Yeah, I just for example, I've pulled some quotes where, especially for higher value homes, 750,000 plus. Obviously 250,000 is not enough in those cases. But sometimes the NFIP can be the best premium for that first 250,000 in coverage on those. And so, we look at everyone on a case by case basis. So in some cases, it might make sense to do a private flood policy for the full amount. But in some cases, and you'll see there's some agents who are going to quote it that way just because it's easier. But for us, we try to look at it on a case by case basis and get everyone the best premium, even if that means having to write two policies to do so. So we might do a $250,000 NFIP policy, and then do the excess on top of that with a private flood company like Beyond Floods, for maybe the additional 300,000 or whatever the case may be. Trying to think, this is kind of off topic of the question, but I looked and the number that I saw is that over the next few years, over 1.2 million Floridians are going to be affected by this new citizens flood issue. So it's definitely going to be beneficial for you guys to be somewhat versed in it for your buyers as well. Let's see. I don't know if you want to do this next question. It's I see a question here from Donald about flood and citizens requirements. He's basically asking, they have a condo on the second floor, 10 feet above the ground, and the agent is saying that citizens is requiring flood insurance, but it's not in a flood zone. That's one I would want to look at that. It's hard for me to kind of say off the top of my head. If the agent is saying that, then to me, it seems like maybe the building is in a flood zone, but maybe they're saying their unit's not. So this one I would definitely get with an agent, get with me, to check for sure if it's required.
Erica, can we follow up on that for a quick second? So tell us a little bit about condos and high rises and flood insurance and how that all works, because I think that's also a theme that comes up all the time, right?
Yeah, and the condo buildings, and we've really been talking about this on a personal insurance level, and all of this Senate bill stuff has been to do with the personal portion of this, but the commercial side of this is gonna be coming down the pipeline as well. And a lot of these condo buildings have excluded flood. But that doesn't mean that they're not in a flood zone. So individual buyers now are being affected by the new guidelines, where after April 1st, if the building itself is in a flood zone, even if you're on the 20th floor, you're still going to have to buy a flood policy, if you're with Citizens.
And again, so if you're in a condo, whether the condo association has flood insurance or not, like what happened with Ian, right? All the people on the West Coast, the winds kick up, windows broken, water comes in, even if you're on the 10th floor. I mean, that's a flood, right? Isn't that technically a flood?
If it's rising water, surge, yes. Rain coming in through the window is really more on the homeowner's policy.
Okay.
But this is also something where I tell my clients, like, that's the type of thing that adjusters will point fingers at each other. So like if you have your flood policy and your homeowner's policy, a lot of times they're going to be saying, oh no, that was flood. And the homeowner's carrier is going to say, yeah, that's flood. And then the flood company is going to say, oh no, it was homeowners coverage. So sometimes it can really benefit to have things under one adjuster doing the work, to try to divvy up and make sure it gets paid out appropriately. But also that's where having an agent comes in as well. Is a lot of times the insurance agents can get somewhat involved. I mean, they're not able to make determinations, but they can speak with claims adjusters and go to bat for you. So when it comes to water, sometimes it can be not as cut and dry as you would hope.
Yeah. Ed, maybe next set of questions here. I see something on grandfathered, right, by Steve?
Yeah,
Steven,
so I want to
Epstein.
make sure, I think we have about 6 minutes in the allotted time that we have, and we have about 4 questions.
Okay.
But yes, that was the next one. We can discuss grandfathered and lower rates premiums.
Grandfathering, I was just gonna say, with risk rating 2.0, it's going out the door that you can't do the grandfathering anymore. And it used to be that you could pull the old flood maps and prove that it wasn't always in a flood zone and grandfather someone into their old flood zone. But with risk 2.0, that's going away, unfortunately.
That said, though, if you have a FEMA policy, it can be assigned, right, to the new buyer. And you're
Right.
capped at 18% on the renewals, right?
Right. And I forget what the year is that it'll finally be, everyone will be.
Yeah, matured, right. They gave a long window though for that, didn't
Yeah.
they, FEMA? Yeah, so it might take, again, if there's a huge new price on flood insurance. It might take
Mhm.
10 years to get to that price, but it's
Right.
gonna go 18% per year till they get to that, right?
Right. Yeah,
Okay.
that form is really helpful to assume the prior. So if your buyer is purchasing a home and the current owner has a policy that's a low premium through NFIP, there's a specific form that you can have them fill out and assume their flood policy, which is a good thing for your buyers.
Okay, let's, Ed, I think we got 3 more questions or thoughts, and let's maybe do them rapid fire here, one at a time.
Okay, so the next one, I'm just gonna summarize, looks like there's a property that during the length of the loan, went through, 3 different, lenders. And the last one is requesting, a different type of policy. So can lenders request whatever coverage they want?
So this
Um,
is Donald's question, Donald Herrera.
So
And
yeah, I
Donald,
don't,
if you can unmute, maybe that'll help too. Go ahead.
Yes, hi, how you doing?
Good.
Can you hear me?
Yep.
yes.
Okay, no, actually, the question is it is account, this is a condo with the previous 2 lenders that were okay with the master policy. Well, the new lender is requesting, the HR6 and additional with the flood insurance also. But with the previous 2 lenders, they were okay with that. I
As
think
far
that's
as-
might be a legal question, but
Yeah, I mean, I think that probably depends on how your loan is structured and if it was sold to different lenders, maybe different lenders have some different requirements, but typically the condo master policy is not going to cover any of your drywall in. So that's if your bank is covering that, then they can ask for you to cover that.
and it's for my own benefit anyway. I know that.
Yeah. Definitely.
Yeah, but well, just a curiosity was, can they?
Yeah, I mean, yeah,
they
they
have
can't
different. They can do whatever,
Yeah, I mean, basically they can, banks typically, they want replacement cost of whatever they're insuring. So if they're insuring your drywall and your cabinets and stuff like that, then they can ask you to cover that. But but condos can all be a little different. So I would recommend kind of getting with your insurance agent or with us if you want a review of that.
Okay, thanks.
Thank you, Donald.
Oh,
Okay, Ed, next.
The next question says, what can you guide us using the flood map link in our IMAP public records app?
So those will be helpful, Stephen, right? Because that will show, I believe, from what I remember, the IMAP, it'll actually show the flood zone maps physically across the topography of an area. So you'll get an idea of from property to property or, lane to lane or zip code to zip code, kind of how that lays out. Our data just pulls directly from that type of map and puts it into our form. So it just gives you a read as to what the flood zone determination is for that specific property. So either way, I mean, you're obviously the eye mapping would help if you're looking in a general area to understand what the risk is if you're looking for like a specific school district for a client. But ours will be exacting to the property that you might be looking at. So hopefully that helps.
I see the last 2 questions are from Stephen, and Stephen, your questions about like who decides on a fair claims payout. Usually there's, if you and the insurance company don't agree, you can do mediation with a third party. I recommend to most of my clients to get with your insurance company when you want to file a claim and get their preferred vendor list. Because if you're working with one of their preferred vendors, like specifically a water restoration company, a lot of times the restoration company will write things up in the correct way, and it kind of makes things go much smoother. I had a big water damage claim in my house, and I called one of the professional restoration companies. They handled the whole claim for me without getting any public adjusters involved. Once a public adjuster is involved, the insurance companies do they go into defense mode, and it can slow your claim down. Obviously, there are times when public, maybe you need an adjuster at some point if something goes really wrong. But I always recommend try to do it yourself first, because they're gonna usually inflate the claim a lot and slow down your payment. And insurance companies, they do have to allow mediation if you and me don't agree, getting a third party involved. And then your last question was, your policy has a discount for having had flood coverage since 1990. And condos usually carry blanket flood. My husband writes condo buildings, and I would say 80% of them have been declining flood coverage lately. So because the property premiums have gone up so much in the state of Florida. So I'm not sure that I agree with your that most condos carry the blanket flood policy. Hopefully they do, but a lot of them are declining it right now. So I would check if you do have any condos that they are carrying that flood policy. And then as far as the 1990, what you're seeing is that you have probably pre-firm rates from 1990 grandfathered onto your policy. And yes, you're likely to be seeing up to 18% increases over the next few years, depending, it fully depends on what the rate is. If your rates are already at where they're supposed to be, then they won't be going up a lot. But everyone is going to be rated by Risk 2.0, and over the next 10 years, they're capping increases at 18%. So, yeah.
Yeah, so the headlines, whether it's FEMA on the national level or citizens in the state of Florida, because of climate and because of all these storms and the exposure, rates are going to go up. I mean, it's just the governments who are offering these programs, whether it's FEMA with flood specifically or citizens with homeowners and now mandating flood. The governments and the governments locally or nationally are starting to now get to a point where they're like, they have to raise the rates on the backs of the citizens, the homeowners, because they just can't continue to fork over when there's storms, right? I mean, that's just the reality of where we are as a nation. And so it's going to get more expensive. So, I think the headlines are shop these things, right? Shop every year, understand what your coverages are, really dig in and understand, the property values, because you and your clients are investing, most Americans have most of their investment in their home, and you want to protect that home, given that that's your big nest egg. And so, it's going to be more expensive, but, at least you'll have the right protection given, a storm. Any other last, I know we've gone over time here. We appreciate everybody being on the call today. Edna will bundle everything and get it to everybody coming out very, very quickly here. Erica's contact information will be there. Again, we would urge everybody just to be conservative and do the homework on this. It's a really important time and a really important topic. Erica, any last thoughts before we end here today?
I not really, other than I would just, whether it's me or whoever it is that you trust in the insurance space, there's a lot going on and a lot of it's case by case basis. So don't be afraid to reach out to an insurance agent and ask what the heck's going on before you get a buyer under contract. Just thank you for all these thoughtful questions. It helps me to know what you guys want to know as I have other conversations. So
Right.
really appreciate the opportunity today.
Yeah, thank you, Erica, for joining us. We're right back here next week in Spanish. So if you like what you heard today and have a Spanish speaking colleague who could benefit from this, please let them know. We'll continue to work through Lizette and the Miami MLS team to promote that and through social media as well. We'll also have this video available so people can rewatch. But thank you again, everyone, and have a great Wednesday. Bye-bye.
Thanks. Bye-bye.